goldsilver.com. Price match guarantee. Free shipping. Global storage options. Phenomenal customer service. Get the best-selling book, Guide to Investing in Gold and Silver, for free at goldsilver.com. We've got something here that I love, and that's the gold-silver ratio. So we're back to the metals again. And what the gold-silver ratio is telling us is that, one of the things that it's telling us is that right now, silver is incredibly undervalued to gold, and gold is incredibly undervalued to everything else. So silver is the area with the really big leverage. You've got some falling and rising ratio stripes in this chart. Can you tell us real quick about that before we get to one of my favorite charts, beer measured in the price of gold?
No, it just shows you that when gold is actually in an uptrend, normally silver should outperform gold. So if you're bullish on gold, then consider silver. We know that the volatility is higher, but we have also seen quite recently that the gold-silver ratio was trading at the highest level since 1991, and now it has been reversing. So I think having some allocation in silver and perhaps also silver mining stocks definitely makes sense at the moment.
Yes, I believe so too. Most of my portfolio consists of silver, the vast majority, just physical silver. And my habits have been to accumulate whenever this gold-silver ratio is real high, meaning, we just came off with silver's value was less than 1/90th per ounce of gold's value. Now it's in the mid 80s. It's very, very undervalued. At these valuations, even when there's bad economic news out there and I'm tempted to buy gold, I go against my feelings to buy gold and I buy silver instead because I just can't justify buying gold when silver is so incredibly undervalued compared to it. And so by buying silver when this ratio is high, I don't sell my silver. But when the gold-silver ratio was below 50 or 45 back in 2011, I wasn't buying any silver. I was only buying gold. And it bottomed at 30. So the silver's value had climbed to from back in the 90s. It was 1/100th of gold's price, and it had climbed to 1/30th of gold's price or value. So when it was 1/50th to 1/30th, I was only buying gold. And then when it rose back up into the 65, I think, or something, I sold that gold that I had accumulated during that time period, and I got like 1.8 times more. I bought silver with it. I changed the gold into silver, got about 1.8 times more silver than I paid for. So I pay attention to this gold-silver ratio. It's very important to me, and it sort of determines how I'm going to accumulate my portfolio. And then there will come a day when silver spikes. It's a very volatile peak if you look at what happened in 1980, and then it did a big pullback. So I'll probably, when this ratio gets below 20, when silver's value has climbed to where it's 1/20th of an ounce, the value is 1/20th of an ounce of gold, or it takes 20 ounces of silver to buy 1 ounce of gold, I will probably be converting some of my silver to gold. And so the silver that I bought in the 80s, I'll be getting 4 times more gold than I paid for by doing that. And then when gold and silver peak, gold, when it peaks, doesn't do as hard of a pullback as silver. So it's sort of like insurance, protecting myself. So that's part of my plan. Goldsilver.com. Price match guarantee. Free shipping. Global storage options. Phenomenal customer service. Get the best-selling book, Guide to Investing in Gold and Silver, for free at goldsilver.com.